So we were averaging $2 million a month. And now we're averaging, over $40 million a month on production. So when an investor calls us, they don't have to worry about getting the response of, we don't have the funds available for you. We're always ready and willing and able to get these deals closed for you.
You're listening to the Azreia Show. If you're looking for quality real estate investing information that you can trust, you've found it. Stay tuned and join the tens of thousands of members that have already benefited from Azreia, your home for education, market information, support, and networking opportunities that will advance your real estate investing career.
Hello, Azreia family. How are you guys doing today? Today is a very great day for me, myself. I'm having an excellent day. How about you, Mike? How are you doing?
Wonderful.
Wonderful. We got Mike. Wonderful. And then we have our very special guest, Mark Steinbeck of Merchants Funding. How are you doing today, Mark?
Doing great. Another great day here in the Valley.
All right, great. So we're all great. Hopefully you guys are great. The purpose of this podcast today is we're going to talk about funding. A lot of people need funding for deals, newer investors, as well as seasoned investors. You need money for deals because you can go out there and find the deals, but if you don't have the money, you can't do anything with it except for wholesale it. And then even with that, you probably don't want to wholesale some of these deals that have enough meat on the bone for you guys to do a fix and flip. So that's the reason why we brought Mark Steinbeck on today. So Mark, let's just kind of jump right in. Introduce us to Mark Steinbeck.
Sure. I'm Mark Steinbeck with Merchants Funding, and we're a private money, hard money lender. We're based out of Denver, but I've been down here in the Phoenix market and Arizona market over 19 years now. So it's been long enough that I feel like this is home, and I can almost claim myself to be a native down here.
Awesome.
Our whole focus is providing the financing for you investors to get your deals done. Everything we do is investor focused. We don't do conventional business. We don't do long-term financing. It is short-term investment financing.
Well, a good thing about it, Mark, because before we got on air, we had asked you, are you currently investing yourself? And you are a real estate investor. So it's not like you're just coming from one side of the aisle where it's just money, but on the back end what it takes to be an investor. How important is that for you to know the ins and outs of investing when providing these loan products?
It's very instrumental in the way our whole philosophy is we understand the needs of the investors. We understand the fact that you need to be able to close quickly on these transactions to take advantage of the opportunities that are provided to you. We understand that, you may, as a solopreneur and an individual investor, or even somebody that's very seasoned in investing and holds a number of properties, you probably don't fit into the conventional lending world box. You don't have all of the reserves that conventional lenders are looking for. You don't have the tax returns. You don't have all of that kind of stuff that the conventional world is looking for. And that's the reason why we're in our business, is to help those investors be able to take advantage of those opportunities. We offer very investor-friendly underwriting. In fact, when it comes to underwriting a transaction, for us, it's really a simple online application. We will pull credit just to get a feel for what the investor and their history looks like, but it's not so score driven like a conventional lender is, again. And want to see some bank statements just so we can understand where the down payment funds are coming from and have an understanding of their financial picture. But very, very simple debt to income underwriting guidelines are virtually non-existent in the way we're looking at transactions. Because of that pared down documentation that we need to get from the client, it makes it easier for them to work with us because they're working with us on a repetitive basis. Once we get an application package in, that package will work for us from transaction to transaction. You're not having to recreate the wheel, fill out an application for every single transaction. Once we've got a client that's working with us, really, I'll get a contract from them. I'll get a rehab budget if they're doing a fix and flip, and maybe I'll get an updated bank statement from them if it's been a while since we've had information from them. But we make it as simple as possible for the investor to get through our process, and then we streamline everything to where we can get things closed in a week or so is our typical closing transaction time.
Wow. Okay.
So you have a question Yeah. So to kind of go back a little bit on credit, right? So that usually gets people a little bit nervous. So it's the loan's not based on the credit. It may be, I'm assuming it's based for the interest rate that you give them.
It is primarily just kind of the structuring of the pricing of the deal. And I'll go back to something that our founder told me years ago, that, the credit scores and the way that conventional lenders will look at credit is not what we want to be looking at, because the scores don't tell the whole picture. You could be somebody brand new and you just opened up 2 or 3 credit cards, and you've got a spotless credit history, but you really don't have any real history behind you because everything was opened 3 to 6 months ago. What we look at is the way that Mr. Gold explained it to me many, many years ago. We just want to make sure we're not dealing with axe murderers. That was his quote that he said, and it's always stuck with me, is that we want to just understand we're dealing with a good borrower. They've got history, they've got experience, and they're going to make this transaction work.
Yeah.
So we do look at the scores a little bit, but it's an overall view of the transaction.
Because that was my thing when I first started, right? I didn't have bad credit. I just didn't have enough history, like you said. So
exactly.
If you have a low score, don't let that stop you from calling Mark or, going to get a loan. Let them make that decision and look at your report. So
exactly. And if it's somebody that's a new investor and maybe, like you said, is a little bit weaker on the credit aspect of it, most likely we're still going to get the deal put together. Maybe we want to see a little bit more down payment, or we adjust the pricing a little bit. But again, it's still going to be very investor friendly and help you get into the game, because that's, for a new investor, the hardest thing is to get that first deal under your belt. Once you've closed a deal, now you've got that mindset of, I can do this, I can make it work. And getting the second and the third and subsequent deals are so much easier because, one, you've got a little bit of track history, you've got some record of what you've been able to do, you've made some profits off the deal, so your financial situation looks stronger, but mentally you're better prepared to do these deals.
Okay. Now, you said something, Mark, earlier that I just wanted to kind of jump in on and get some clarity on, because you said you guys are private money / hard money lenders. And I know private money and hard money are 2 completely different things. Can you clarify that statement for me? Didn't mean to put you on the spot, but just for my own clarity.
Yeah. It's from my perspective, it's always been kind of one and the same. And I think it's a little bit of the perception of what hard money is. I came from a banking background, and hard money was kind of the old school, pay me back or I'm going to break your kneecap kind of.
I want that.
Exactly. And so I personally have always been a little bit hesitant to use the hard money terminology.
Okay.
When I say private money or hard money, it's really just because we look at the transaction from more of an asset basis and less on that full underwriting like a conventional lender does. We're very familiar with the investor, very comfortable with the investor, and you can call it anything that you really want, but it's the lender that can be able to perform quickly for you and somebody that you can count on to get your deals closed.
Great clarity. And I wanted to clarify that for some of the newer listeners that don't quite understand the difference between hard money and private money. So just wanted to clarify.
And I would also add, a lot of times your private money is going to be more of your private network, your friends and your family, the people that are within your circle. And maybe, you've got that great uncle who's retired and he's got money sitting in an IRA account and he funds your transactions. Private money usually is much more limited in their ability to be able to fund transactions.
Yep.
We are a little bit, and I hate to say this word, but a little bit more institutional in the aspect of, I can tell you we're close to being an unlimited source of funds. I mean, we do have limitations on our bank lines and our credit facilities that we've got available to you. But the fortunate thing is I don't have to have a client call me and tell me they've got to close the deal, within the next week. And you hear these stories about, they call their traditional lender that they've always used, their go-to source. and their funds are all out right now.
Mhm.
And the last thing an investor wants to hear is, we'd love to do your deal, but we're waiting for some payoffs that are supposed to be coming in. We're expecting payoffs by the end of the month, and maybe we can get your deal done in 2 or 3 weeks. Well, you need the deal closed this week. So you don't want to be in that realm where you have a limit to what you can get done. And this will be the point where I will brag a little bit about what we're doing at Merchants Funding is this year, and I just confirmed this, that we're going to be north of $500 million that we've funded this year across all of our markets. So that's $500 million that we put out to investors just in 2021. And to put that into perspective, when I first started with the company 22 years ago, our first year, we did $24 million over the course of the year. So we were averaging $2 million a month. And now we're averaging, over $40 million a month on production. So when an investor calls us, they don't have to worry about getting the response of, we don't have the funds available for you. We're always ready and willing and able to get these deals closed for you.
So you guys are the golden ticket.
Yes.
Sounds good. Sounds good. So let me ask you this, Mark, because you said you've been doing this for 22 years plus. As a investor that never done a deal with you guys, never came to you asking for credit, a line of credit, or anything like that, what should we have prepared before we even contact you or sit down with you? That way, as some people are proactive, they can say, all right, well, I have everything prepared. Let me go to Mark and see if I can get this loan. What should we have prepared prior to?
Exactly. For us, an underwriting package is pretty simple. The things that we typically will ask for is a simple online application that's through our secured website, merchantsmtg.com. We ask for current bank account, investment account statements, just so we can get an understanding, again, of where the down payment's coming from and what their financial picture looks like. And that's really it from an underwriting standpoint. Okay. We'll get a copy of their driver's license so we can document the file with that. And then if they're going to be purchasing in the name of a corporation or an LLC, we'll ask to get their corporate documents. But that's not even something that we need to have up front. A lot of times what I'll do is I'll get the application from the client. They don't even have a project in mind, but they want to get pre-approved. And we're always glad to do that for new investors or somebody that's looking to make a change from their current lender. Is they want to know that, is Merchants going to be available for us? So we'll get that application from them, run them through on a pre-approval basis, have them fully approved from an underwriting standpoint that we're comfortable with working with them as a client. And then once they're pre-approved, the next step is get a property under contract and get us their purchase agreement and their rehab budget so we can get everything moving forward to close. So we don't require a lot of documentation up front. And even then, once we've got them pre-approved, it's just get the contract in, let's get it closed.
And Mark, I notice, I know a lot. So if someone's working with an agent, in order to go shopping, they always want proof of funds. Once they're fully underwritten, will you provide that for the investor?
Exactly. Here in Arizona, we will use the Arizona Association of Realtors pre-qualification form. And this is something that I always like to point out to my investor clients, is that the pre-qualification letter, it doesn't have a lot of clout. There's always ways that somebody could, back out of that as a commitment. But from what I tell my investor clients is, I'm going to give you this pre-qualification because that's what your agent and that's what the listing agent wants to see when you're submitting an offer on a property. But from your perspective as an investor, you need to know that we have done all of our due diligence on you as the investor. You are pre-approved. It's more than a pre-qualification where we think you would qualify for a transaction. We've gotten you fully pre-approved, and you're ready to go out and write your offers with confidence, knowing that outside of something just being totally off on the numbers of the project, you're pre-approved and we're going to get that deal closed.
And this is the most important part, because yes, I love when people just go out and start making offers, but if you're going to flip a property or buy and hold, you got to know your lender's terms. You got to know your down payment. You got to know your interest rate, your monthly payment, so you can calculate and write the proper offer. So you definitely want to get with a lender first thing.
Exactly. Because again, when you're investing in real estate, it all comes down to the numbers on the deal. And with fix and flips, which is the bulk of what our transactions are, you kind of want to start on the back end, and then you move up to come up with what your maximum allowable offer is. You got to know what you're going to be able to sell the property for, and then back out all those costs: your hold time, your holding costs, your loan costs, your rehab costs, and then that will eventually give you. And also you need to take into account the profit that you want to make from the deal, because that's why we're all doing the investing.
Yep.
And then that will tell you, okay, here's what I can offer to pay on this property.
Love it.
That's great, because that was going to be my next question, is qualifying the asset in order to be funded. So, you hear a lot of people say, you have to have at least a 30% margin in there. What are you guys looking for if we bring an asset to you? Let's just say on the fix and flip side, are you looking for, what kind of margins are you looking in there in order to qualify?
Here's kind of the way
asset?
that we will look at transactions, and these are the simple numbers that we use on a regular basis, is most of our transactions are at 90% of project cost. So that's 90% of your purchase price and your renovation costs. We build that together into our loan, fund the improvements with the transaction, and we want to be no more than 90% of cost up front, and then we want to be no more than 75% against the after repaired or the ARV value of the property. So we will look at those two numbers. And the good thing is, in the strong market that we're in right now, I can't remember the last time we ran into an issue where the property didn't appraise out on an ARV basis, just because of what we're seeing going on in the marketplace. And a lot of times between the point of purchase today and when they're going to sell the market sell the property in 3 to 4 months, they've seen such market appreciation in the market that even though we were at a 70 or 75% loan to value against the property when we originated the loan, when they get ready to sell the property, we're probably more like a 60, 65% loan to value against that property. So that enhances the profit margin for the client, and just makes the deal better. I always tell people, you want to look at things on a conservative basis. And if the numbers work out on a worst case basis, you don't want to count on, some unexpected gift.
Right.
If the project, the numbers make sense on a worst case basis, and then you can be pleasantly surprised, everybody comes out looking good.
Basically, be conservative and let the current market do what the current market do, and that's run up appreciation.
Exactly. Yep.
Okay.
And that's something that we're seeing right now is, you read the headlines, and, I don't want investors to think that there's anything wrong with the market that we're in right now, because the headlines are saying, the market's slowing and this and that. But the truth of the matter is, it's not that the market is slowing down. Things are still selling extremely quick, and people are getting many times above ask prices for their properties. It's just that the appreciation on a year over year or month over month basis is slowing down. But
Gotcha.
That isn't necessarily a bad thing from an investor standpoint and a market standpoint, because we want to have long-term sustainable growth, not booms and bust cycles.
Got it. So let's jump in a little bit too, because you said a couple of things about construction loans. I thought that was interesting. How about just tell us about some of your products you offer?
Sure. As I said, the bulk of what we do right now is fix and flips. We do offer a shorter term 2 or 3 year loan for the investors that are buying and holding. Maybe it's something that you want to acquire the property and you're going to do a fix and flip up front, but rather than sell the property, you want to hold on to it either as a rental, or what we're seeing a lot of right now is a continuation of that vacation rental market, where they need some interim financing to hold that property and to be able to prove what the income is from that property from a vacation rental. So we do offer the interim mortgage, but the bulk of what we do is for the fix and flip investor. And that's where we're providing acquisition money and the renovation or construction money. And a lot of times what we're seeing, kind of got two different markets that are going on, right? More of the outlying areas where it's newer construction, more tract style developments. That's where we're seeing more of the cosmetic renovations. It's a property that was built 10, 20 years ago and just needs a cosmetic refresh. The cabinetry looks dated. The flooring needs to be all updated. Maybe the landscaping and the paint scheme on the house needs to be updated. So those are what I say is more of the cosmetic renovations. It's really just making the property look nice for today's buyer, because the floor plan is still functional. It still fits the needs of what today's home buyer they're looking for. So that's typically what we're seeing more in the outlying areas where it's newer construction has been pushed to the periphery of the city. And we're seeing those deals there. On the more interior locations, something like, let's say, a downtown Phoenix or an Arcadia market, South Scottsdale, what we're seeing in those markets of the fix and flips are not so much just the cosmetics. Obviously, they're going to make the property look nice, but they're also doing the value add, building out the back end of the house to create a master suite in something that was built in the 1950s or 60s, where we didn't have a true master suite like we have or like what today's buyers are looking for. So they'll blow out the back of the house, reconfigure the space in the house to add value by creating that extra level of finish to the house and make it fit for today's buyers. Again, we'll go back to that house that was built in the 60s. Typically, you had a kitchen that was separate from the living area, which is separate from the dining area. Today's buyers, they don't want to see that. They want the open spaces. They want the rooms to flow into one another. So we'll see clients that are removing walls, buildings, or putting in supporting beams to open up spaces and create that functional flow that today's buyers are looking for. And then again, obviously, update all of the aesthetics of the house.
So let me ask you this, Mark, real quick. So as far as like ground up new development with infill lots, let's just say a South Scottsdale and North Phoenix, and we find a lot, get the lot for a really good price. How is your funding for ground up new development with infill lots?
Yeah, I'm glad that you brought that up, because we do ground up construction. On the fix and flips, again, we're probably at 90% of project cost. On the ground up construction, we're going to want to see maybe a little bit more equity into the deal. But as a general rule, and this is something for investors to always be thinking about, if you're looking at ground up construction, your lot cost, your land cost, the site itself should probably be between 20 and 25% of your total project cost. And then when we're looking at it from an underwriting standpoint, a lot of times what we'll have is clients that will come to us, they've bought and paid cash for the lot because it's something that they found. And, a lot costs, it's a lot easier to pay $50,000 for a lot than $250,000 for an entire project. So they'll come into us, have purchased the lot free and clear. That's their equity contribution into the transaction. And then we're fully funding the construction costs on that.
Wow.
And one of the things that is really an advantage of working with merchants, whether it's the construction side, which is this is kind of the norm, but also on the fix and flip side, is that our investor clients aren't paying interest on their renovation funds or their construction funds until they've actually taken those draws, until they have made the request to get an advance for their renovation money. They're not paying interest on that. So if they've got a $60,000 renovation budget, they're not paying interest on that $60,000 until they do the draws. Ground up construction, if they've got a $200,000 or $300,000 construction budget up front, they're not paying any interest payments because they haven't done any advances. And then as they do the construction and as our loan amount, the outstanding increases, that's when they start paying interest on the construction money.
So they're just basically paying interest on the money that they use.
Exactly.
Okay.
And with a fix and flip project, or for a construction project as well, if you budgeted based on what you're expecting to be able to spend. But maybe you find some discounts somewhere. You find some closeout for some flooring that fits what you're looking for, or you realize some cost savings somewhere along the line. If you never advance those monies, then they never cost you anything, and your payoff is not going to include those funds.
Okay.
So I have a question. So since there's more of that ground up going on, the value adds, and since it's a lower supply, I'm also noticing an amazing transition with mobile homes. So do you deal in that world? Like, you found it in a lot and you want to bring like a newer mobile home onto the lot, would you do those projects?
That one gets to be a little bit tricky because, anybody that works in that realm, they understand that until the house, the mobile home, the manufactured home is brought to the site and not only permanently affixed to the land, but it also has to be legally affixed to the land. It's personal property. So that home initially is just like your automobile. It's just got a title to the house, just like you have a title to your car. For us, for the manufactured housing, it needs to be permanently and legally affixed to the land for us to be able to lend on it. And that's like what the conventional world is. So if you were doing a flip on the property, it needs to be that for your end buyer to be able to get conventional financing. And then there's also some other restrictions on it as far as the age and the fact that it has to be a double wide unit, that kind of thing. So we will look at those. We're not as aggressive on those, and not, there are more limitations on those than what we're looking at either in the single family or, from us. We'll lend on condos, we'll lend on townhomes, we'll lend on single family, we'll lend on the 1 to 4 family, because again, all of those product types, the end buyer can get conventional financing. And then we will also look at the true multifamily, something that's 5 units and up. We'll look at those as well, just knowing that the investor that buys that property, whether they want to hold on to it or sell it, they're not going to have the conventional world to be able to go to get long-term financing. It's going to be more of a commercial mortgage.
Okay. Well, what I want to do now, real quick, Mark, let's take a brief break. And when we come back, let's talk about some of those long-term hold products that you have outside of just the fix and flip products. So let's take a brief break. We'll be right back with Mark Steinbeck of Merchant Funding.
Do you need to close more deals? The answer is, then you need to call more motivated sellers. How do you do this? Skip tracing. Skip tracing gives you the access to the telephone numbers and email addresses of distressed property owners all across the country. Whether you're looking for vacant houses, foreclosed houses, tax delinquent properties, skip tracing can help you get in touch with those hard to find homeowners so you can write those offers. We recommend batchskiptracing.com. Batch skip tracing has consistently delivered the highest quality results in the real estate industry. You simply upload your leads to batchskiptracing.com, apply coupon code Azreia, that's AZREIA, at checkout, and receive 15-cent skip traces. That's batchskiptracing.com, apply coupon code Azreia at checkout for 15-cent skip traces.
Okay, guys, we are back, and today we're talking all about funding, and we have one of our close business associates with us on today, Merchant Funding, and we have Mark Steinbeck on today. So, Mark, we talked about fix and flip capital, fix and flip products. Now, what about something that you have for some of the longer term hold, some of the investors that's looking to get into some of the smaller multifamilies, 2, 3, 4, 5 units, and or just a single family, rental that they want to hold? What kind of products do you guys offer for that investor?
Sure. For that investor, for that product, we offer up to a 3-year loan term, and it's an interest-only payment while that property while that loan is outstanding with us. So it helps them be able to manage their cash flows, because it's just strictly the interest that has accrued the prior month. And it allows the investor to get into the property, document and report the income from that property so they can go get conventional financing, whether that be Fannie Freddie conventional mortgage, or if it's 5 units and up, to be able to go get a commercial mortgage to own that property. So what we do is, again, our flexible underwriting. When we're looking at the transaction, maybe this is a first-time investor, and they don't have other rental properties. They don't have the history to be able to support that. And they may have saved up some cash and they're ready to go start investing. But from a conventional lender standpoint, the conventional lender wants to see, is your W-2 pay stub enough to support a mortgage on your primary residence and all of your other personal debts? And then secondly, will you be able to cover the mortgage on this investment property? And again, that comes down to our investor-friendly underwriting mentality of, we don't necessarily care that your pay stub isn't going to support this new mortgage. We know you're going to be renting it out. We know you're going to have cash flow coming from the property. We know that the mortgage is going to get covered and you're going to be able to put some money in your pocket to cover any incidentals that come up as you own the property. So for the investor, we give that interim mortgage, allowing them to get into the property, show that it is cash flowing, have a rental agreement in place, have it reported on their tax returns so that when they go to do the refinance, they've got history on the property. They can show, here's what my expenses are, here's what my income is, and this is the reason why I own this investment property.
Perfect. And that's excellent, because it lets that entry level investor, like you said, show that history and show that, hey, this asset that I have is cash flowing. And in that way, when they go to get the long-term financing, they can use the cash flow from that investment plus their pay stubs to help them qualify for that long-term loan.
Exactly. Yeah. Again, it comes down to understanding the investor. And from a conventional world, maybe it doesn't make sense because this is their first time property and maybe they don't have the income to support it. But again, that investor mentality, we understand the fact that there's a reason why you're buying this as an investment property. It's going to create cash flow for you to live on today. And then your long-term objective of the rental property, and this is the way that I look at my investment properties, is I'm buying and holding for the long term because I'm going to take the long-term appreciation of this investment property, have a tenant pay down the mortgage, have the appreciation of the asset, and eventually it's going to be a retirement asset for my wife and I. When we're ready to retire, these properties are going to be paid for free and clear, and it's all going to be cash flow.
And the majority of the investors, no matter who they are, if they're fixing and flipping or wholesaling or anything like that, they're all looking for that kind of money. They're looking for the rental passive income, because who wants to work for money when you can have an asset that brings money to you? So that's a great point you make there, Mark.
Yeah, and we see a lot of investor clients of ours do this process of, they'll kind of what I see a lot of times is we'll see people that will start out as wholesalers and they find the deals and they make a little bit of money as they turn it over to the investor that's going to eventually rehab the house, hold on to it as a rental, whatever the case is. So you do that, you build up some cash reserves, and then you start doing a few flips, and you flip property or two or three, and you build up more cash reserves. And then you find that deal that, okay, I'm going to buy this one, I'm going to update it, and I'm going to turn it into a rental and maybe park some of my money on the side. And just like you said, that will build that passive income. Flipping and wholesaling creates income today. Yeah. Long-term rentals create income for the future, as well as providing cash flow today. But it's not going to be huge chunks of cash at a time like when you are wholesaling or flipping a property, doing the quick flips where you're turning the property over. That's where you're going to see a big payout, but it's going to be sporadically. If you flip a property every 4 months, you get paid 3 times a year. When you're investing for the long term, you get paid a much smaller portion, but you get paid 12 times a year when you collect your rents. And then eventually those payments become larger and larger, and eventually then you can sell the property, do what you want to do.
Great point. If I could switch a little direction.
Sure.
So you have some wisdom, you have some seasoned experience in this world, right? So this is more of a crystal ball question, right? I know you have one, Mark. So one day in 2000, whatever it was, 8-ish, right? One day everything was wonderful, and one day, next day it wasn't, right? So, that's a lot of the talk right now as well, right? When will this end? This isn't sustainable, and maybe there's some people out there nervous to go take that fix and flip because they think something's going to happen, or go buy that rental because they don't want to pay for the top price. What's your thoughts on that? No specific answer, just where are you at in that whole conversation?
From a headline standpoint, I mentioned it earlier, the market's cooling, we're in for a slowdown, that kind of stuff. But I see us in still a strong long-term market. And the great thing about if you're wholesaling or you're fixing and flipping a property, you don't have to project out what is the market going to be 2 years from now, 5 years from now, 20 years from now. All you're looking at is, can I be comfortable with where we're headed in the next 3 to 6 months? And even though we've seen the appreciation slow down slightly from the peaks that we saw earlier this year, we're still seeing positive movement in pricing. And the underlying dynamics of the market that we're in right now is we've got people continuing to move here. So we've got demand that is not stopping. And we've still got a very limited supply. So the law of supply and demand says, that if you're seeing increase in demand and you've got a limited supply, we're still going to see appreciation. Now, maybe that is going to slow down because we've seen some more homes come on the market. We're seeing a little bit larger availability of homes right now, but the demand is still there. The demand is still strong. People are still moving here. People want to live here because of everything that we offer. And it's not just the climate when we used to be such a seasonal market of having snowbird visitors for 3 or 4 months of the year. And then they would move out for the summer and everything was gone. We're not seeing that so much in the marketplace because we're seeing a much more diversified demographic in the communities that we're in. And then we're also seeing strong job demand. People are relocating businesses here, and it's not just small businesses, it's large businesses. And we're continuing to see the technology fields grow. That's bringing people here. We continue to see the influx of California investors and people that are just moving out of California coming here, as well as from other parts of the country. Arizona is a great destination market for people to move to and invest in. So I'm comfortable with where we're at in the marketplace, and I expect it to be something that will continue in a positive market. I don't expect also, like you said, 2008, when the market changed so rapidly and so deeply, the change. I don't think we're going to see that happen again either, because what fueled a lot of that boom and bust was I'll call it reckless lending, because there were so many people that were buying homes, and not just a home for their family or not just one rental. They were buying 3, 5, 10 properties, and they didn't have the resources available. They didn't have the down payment into the project. And it was just irresponsible lending because some of the lending products that were out there as well that made it too easy for people to qualify. We went through that, and we've seen the conventional world want to see some sanity really when they're coming to underwrite transactions. They want to know that people have a job, they've got some money to be able to put down. And I think that in the long term will make our market stronger as well. We're always going to have some people that situations change. There's family dynamics that change. There's job situations that change. And, we went through that with COVID too. The front end of COVID was a scary time for the real estate market. And we saw things drop off, but look how quickly we rebounded and came back even stronger. So the long-term dynamics for the real estate market across the country and specifically here in Arizona, I feel comfortable with.
Awesome, man. Great answer.
Perfect.
Love the perspective.
All right. One last question for you, Mark, and then we'll wrap up. Kind of going back to what Mike was saying is about the changes in the market. How do you see inflation our dynamics of inflation kind of changing possibly some of your lending practices, or, just lending in general? I know it's a pretty broad question, but, just give us what you can.
Well, let me think back to, my college days of having to study macroeconomics.
Yep.
But, I think, we've been experiencing strong appreciation, and that has benefited our investors when they go to sell the properties. The challenge to that is that obviously when you go to sell a property, your end buyer needs to be able to qualify for it. And we've been fortunate that, we've seen the interest rates remain low, and that helps people to be able to qualify and be able to afford a home. A lot of times it makes it cheaper to buy a home than it is to rent a home. So, all of those things continue to keep the real estate market solid. As inflation hits every aspect of our life, it is a little bit of a concern, because we've seen that from our investor clients. The cost of lumber went up tremendously during the last year, or let's just call it the COVID era.
Yep.
We've seen the challenges in the supply chain to be able to get appliances and windows and anything associated with the construction or the renovation of a home has increased over the last few months and last year and a half, let's just call it. So that has impacted things, makes it a little bit more challenging for the investor when they can't reliably count on, if I go to my big box home supply store and I can't count on the cost of the cabinetry or my light fixtures or my plumbing fixtures or my flooring to be consistent from the project that I just closed on and was rehabbing 3 months ago. Things changed dramatically in a 3-month period. So that's made things challenging. But again, the appreciation that we see on the back end with people being able to get more than what they expected when they initially got into the deal versus what they are selling it for, that's helped things out as well. So I think it's one of those things that there's not really an overly negative aspect or an overly positive to it. It kind of keeps things balanced out a little bit.
Okay, great. Great. So guys, in a nutshell, just make sure when you're doing your due diligence as far as your numbers, don't be too aggressive. Still run your numbers on a conservative basis. And then if you get the appreciation, which more than likely you will, just accept it, but don't try and bake in that forced appreciation, knowing that the market is continuing to rise, because at some point there's going to be a flattening, and we kind of welcome that because we want that stable market. So we'll know, hey, I did a flip 3 months ago, cabinets were X, and now I can go and now cabinets are still X. So thank you, Mark. I really appreciate it, man. How can we find you? How can we get in touch with you? We know that you're a business associate, but kind of where are you at? Your crossroads, telephone number, email, anything like that?
Sure. Yeah, that's one of the things that, we're very proud members of Azreia. I was at the very first Azreia meeting 18, 19 years ago now. I can't remember how long. It's been a long time. So I was at the very first meeting. We've been proud business members throughout all of this. And, I'm always at the monthly meetings. So
Excellent.
Stop by and talk to me there. I'm available a lot of times at the fix and flips and some of the other subgroup meetings as well. And then you can always contact me via email, msteinbeck@merchantsmtg.com. That's MSTEINBECK @merchantsmtg.com, or my cell, which is always available at 602-410-0845. If you're new to this and you want to kind of get information, always glad to talk to new investors. You've got a deal that's on the table and you need to get things closed quickly, contact me. We'll get that application process going. And again, if you're a new investor and you just want to get pre-approved, or if you're working with somebody else that you haven't been satisfied with, or you've run into some issues, let's talk about your situation as well and get you moved over to working with merchants.
Okay, sounds great. Thank you so much, Mark. Also, guys, they're at the corner of Scottsdale Road and Shea, so you can also pop in there and go and see them. I'm sure Mark will definitely welcome you in.
You bet. We've got our office here in Arizona in Scottsdale, and in addition to, I know we're focused in Azreia, working in Arizona, but because of our size, we really cover a lot of the Western U.S.
Okay.
Our corporate office is up in Colorado. That's where I started with and I relocated down here 19 years ago. We're here in Arizona. We're in California, Washington, Oregon. So we cover the West Coast. We're in Texas as well and a few other states. But those are our biggest markets. So no matter where you're investing at, let's see if we can work together.
Okay. Sounds great. Mike, any last words?
No, yeah. Once again, Mark, thanks for always being a valuable resource to the Azreia members. With information and most importantly, money. And then I really, truly think if you're listening to this podcast, there's a lot of golden nuggets dropped, and this is probably worth listening to again.
Yes, absolutely.
So
absolutely.
Check it out, man. Thanks for being here.
Thank you, Mark.
Glad
really
to talk to you guys.
it.
We'll see you soon.
Okay, guys, you know what to do. You got the information. You have the resources. Make sure you see Mark at one of our monthly meetings. Get the information you need from him. That way he can help you expand your investing career and your portfolio. So, as always, thank you. Marcus, my co-host Mike, the executive director of Azreia, and Mark, again, we thank you for being with us.
You bet. Glad to be here.
Thanks for listening to the Azreia Show with your hosts, Marcus Maloney and Mike Delprete. We hope you enjoyed this episode. If you found this information valuable, head over to Azreia.org and learn more about our community.